This podcast is about scandals and scams. What they taught us in this country basically is completely a scam. The influx of information just spread like a wildfire. Barely anybody knows about credit. Even those gurus that claim to be gurus out there, they don't know what they're talking about.
This is the Oracle of Finance, Rabieh Tayfour, and this is my YouTube channel, The Key, the Financial Literacy, Guns, and Exotic Animals.
Welcome to the Key to Financial Literacy, Exotic Animals, and Guns. And I'm one of the hosts, Rabieh Tayfour, and we have my good friend here, Ryan, with Ryan Hatton, or is it Patient?
Patient.
Ryan Patient. Pretty cool name, Ryan.
That's right.
And he's with One Finance Source. We've been dealing with One Finance Source now for a couple years, and I could honestly say that ching ching, they're about the money, and they do very good funding within regards to personal and business. So Ryan, welcome.
What's up, man? Thanks for the intro. It's very nice. Yeah, we've been working together for a while, man. We've been, I can't say enough good things about you. What I like about working with you is that you're very creative and you have a lot of information to give, and just very kind, genuine person.
Definitely. Thank you, man. I appreciate it. Now, guys, we're just going to jump into it. Let me just put my phone on silent. So this podcast is about scandals and scams. And one of the scandals and scams that I've come to notice, over my couple of years in the finance field is what they taught us in this country basically is completely a scam. And what I mean by that is simply the entire infrastructure that they built, from education to medical to the laws, is just ridiculous. And it was set in place to basically make the civilization or everyone into a slave, right? And thank God for the pandemic, because when the pandemic happened, the influx of information just spread like a wildfire. And from there, they said that the pandemic has created tons of millionaires, right? So we are very grateful for that. Now, getting into what I mean by scam, right? So the entire credit system itself, I can give you multiple examples. First and foremost, barely anybody knows about credit. Even those gurus that claim to be gurus out there, they don't know what they're talking about. They're just really good marketers, right? And I'm very confident, though, when I say that, right? And one of the major things or major aspects when it comes to credit is obviously data points, right? Barely anybody knows about data points. I would say that the reason why 70% of this country is in debt is because of that. Now, when it comes to data points, this is the exact algorithm that the actual credit bureaus use to create and generate everybody's score, which is a 35-30-15-10-10 rule. 35% of what makes up your score is going to be payment history, right? So if you're making payments on your credit cards, if you're making payments on your loans, whatever payments you have on a net 30, net 60, whatever it is, if you're late, that's the largest part of your credit score, right? Now, we're going to get into the scam part. So 30% of what makes up your credit score, people think is whenever they get a mortgage or an auto loan, that's what hurts the score. It really doesn't. Credit is built off of two foundations. You have the revolving side, and then you have the installment side. The revolving side is going to be credit card, and then your installments are going to be loans. So that 30%, we've been taught to keep our credit card balances at that 30% mark, which is, excuse my language, bullshit. It's not 30%, it's not 20%, it's not 15, it's not even 10. You have to be below 9% by the end of the billing cycle, or your statement closing date, to be exact. 9%, right? Or else your score is going to tank, okay? So a quick example is let's say you have a $100 credit card limit with a $100 balance. You have to pay $93 by the end of the month, or else you're screwed for the following month. So that's basically one of the scams. And Ryan here has dealt with a lot of people that, he goes into funding with, and they have that problem automatically. They don't know how to make their credit card payments. Their balances are too high. And what happens when that occurs, Ryan?
And, if you're late one time on a payment over 30 days, it's going to affect you for 7 years. And especially in the times that we're in right now with the way that the lenders are, where interest rates are, everybody is so hesitant to give money out. And really the important thing is that you got to make those payments on time, because if you don't, then you look like a risk, right? And it's going to take 4 or 5 years for them to even think about considering just on one late payment. What's crazy is that even if it's a late payment of a minimum $30, right? It doesn't matter if it's a $30 payment or a $3,000 mortgage payment. A late payment is going to show up as a late payment, and it will completely tank the credit for sure. And to kind of piggyback on what you're talking about with the balances, I've had scenarios where people will just go and charge up on their credit cards, intend to pay it back, but don't pay it back by the statement date, and then boom, like drops their score like 20, 30 points. And they're going to have to wait another 30 days before they can pay that down and boost that score back up. It's just going to delay their time to actually get funded.
Well, I got one better for you, Ryan. Actually, what they do is because of what they've been taught, so it's not really their fault, is they make their payment on the billing due date, right? Mm-hmm. And then they're like, yes, I made my payment and I'm good to go. And then all of a sudden, rule of thumb is it first starts the billing due date, and then 3 to 7 days after that comes your statement closing date. That is the most important day of the billing cycle. I usually tell people that the billing due date, abbreviated as BD, which in Spanish stands for basura date, garbage date. So people pay it on the billing due date, and then automatically the following day, they're like, yes, I'm good for the month. I made my payment and my balance is low. Then they go out to eat, and they pay their car insurance 2 days later. Then they pay their mortgage a couple of days later. All of a sudden now the statement closing date cuts off, and then their score cuts down, and all of a sudden they're shitting bricks, right? So that's basically the problem, is that we've been taught the wrong way. So this is one of the aspects of financial literacy that we pride ourselves in actually teaching, right? And this is how we've helped so many people out, is by educating them on the right way to use their credit. And the sad part about this is that 70%, and I've looked up statistics, 70% of people that go for business funding, when they go for business funding, they can't even qualify for tier 1 banks. So they automatically revert, or they just convert into like an MCA loan, which is called a merchant cash advance, to where they get daily payments, weekly payments. And I took on 2 of those, by the way. So I purposely took on 2 MCAs, I swear. And then my monthly payment was like $25,000 a month. So my interest was like 75%. And I was making the payments like easy. But it's crazy how much money that they made on me, and I didn't even notice that I finished the loan. But there is something that they could do about all this, Ryan, and then this is another thing that we help out our clients with, is the personal credit obviously is ran by your social, right? And then you have your business credit, which is ran by the business social, which is tied to your actual tax ID EIN number. So considering the fact that we tell people to stay below 9%, technically there's no such thing as a revolving credit card when it comes to personal credit. So it's only a charge card if you think about it, because you got to pay off that 90-something% by the end of the month. However, if you get business credit cards, then with the business credit cards, you can spend as much as you want, take your time to pay it back, you get rewards, and that's more or less the secret and the hack behind, utilizing credit.
You bring up a valid point with the EIN and the business credit cards, the charge cards, etc. A lot of people don't understand that if you don't have business credit, that you can still get business credit, but it's based on your personal credit. Right, so like you can qualify for business credit cards without having any type of business income, revenue, etc. Right.
Mm-hmm. So Ryan,
and I think
on the head.
What's that? Sorry, good.
No, I said I think you just hit something on the head, because it's a lot of those gurus that say that you can get business credit without your personal credit. So, very good point.
All right, so basically what I was saying is that a lot of people they think that, I've got to be a big corporation, My business doesn't have any revenue generated, so I can't get any business credit. And those are all, those aren't actual. That's not factual, right? So you can qualify for those business credit cards. Yes, your personal credit still has to be good, right? Because that's what they're going to be based. That's what these banks are going to be basing that off of. But the good thing about that is that it, especially for a startup, for marketing, whatever, any type of capital you really needed, build out, etc. Use those credit cards for that, and the balances don't affect your personal credit, which means it's not going to drive your credit score down. Because you and I both know that when these businesses are doing the startup phase, they need as much capital as they could possibly get, because otherwise, they're going to be scrambling. And if they use their personal cards, it drives their credit score down. And guess what? They're only going to qualify for those things you just talked about, the MCAs. And that will be a nail in the coffin for that business, because they won't be able to support that type of daily or weekly payment. Plain and simple. You could do it because you obviously have the business for a while and you've got the revenue coming through. The average person, they're starting a restaurant, they're starting whatever. They're not going to have that type of revenue coming through, and then it's going to crush their cash flow. Eventually, they're not going to be able to make it.
Man, I'm not going to lie. I almost sunk a couple times, but thank God. You never know where the next 20,000, 30,000 is going to come from, but it came. And it, I kind of didn't notice in the beginning anyways, but until the end when they called me to remind me that the payments or the loan's almost done, that's when I figured it out. But yeah, so the whole funding or business funding stages, right, or what like these people talk about online, and I've heard it a lot, is that they say that if your personal credit is bad, don't worry, pay us $10,000 and then we'll go ahead and build your business credit, then we get your business funding. Now, Ryan, you're heavy in the funding space and you can basically vouch for this. So there's no such thing as no PG funding. And I don't care what anybody says. Maybe if you go to Sam's Club and you get like a Sam's Club card, they still do a soft pull, but it's technically business credit. But even if your company qualifies for corporate funding, okay, that's where you do like $2 million to $10 million annually, they're still going to do a soft pull. So I challenge whoever to show me, no PG funding, please, because I've still have yet to see it. You?
I haven't seen it yet either. And listen, I'll tell you right now, if you are taking on a loan and you think that, or any type of funding or financing, you think that bank is not going to come after you to get repaid, you got another thing coming. Because when it comes to money, if you gave somebody money and they said, hey, I'll pay you back, and they never pay you back, next time you see them, what's the first thing you're going to ask them? Where's my money?
Mm-hmm. Yep. Damn right.
So.
But guys, the as far as for this podcast, really, I just wanted to give a brief intro while we're getting the logistical part of the technical part of this podcast setup done. I just wanted to keep it short, basically, just to make sure that the video clarity and everything came out right. But we got a lot of really cool things to cover with you guys, and we have a lot of special people that we're going to have on this podcast. So stay tuned, guys, because things are going to get very interesting. And one of the aspects of what we're going to talk and preach about is we're going to give you guys actual data points to like some of these banks. We have a special guest who specializes in the SBA, another guy, Jose, who this guy knows all the hacks right now. He's traveling out of the country avoiding taxes in a legal way, right? So he knows the laws and logistical parts of that. So just the information that you guys will learn on this podcast, I promise, is going to change a lot of people's lives. And we will have mentorships available for those who are interested, who are tired of working a 9-to-5. And then, of course, if you guys need personal or business funding, then Ryan here is one of the best at it. And we have our own banks and relations managers that we can help you with. Ryan, do you have anything to leave off with?
No, man. I mean, I think that, when we jumped on we started talking about, the scams and how everything is like not as it seems. That's where you need people that have actually done it, who live it. And that's where, guys like you and Mike and Jose and myself can help people out. And, I think it's really important. No matter what you do, we all need a little bit of guidance. Doesn't matter if you've been in the game for 30 years or you've been in the game for 30 days. You need guidance, right, to get to that next level, because there's always that next level. And I think that this podcast is going to be a huge help for, a lot of people out there that really don't understand, credit. They don't understand funding, financing, all of that. And, I think it's important to make sure that all of, everybody that we touch on a daily basis has that understanding and that, the knowledge that we can give to them, so they don't put themselves in a bad position, so they don't lose their business because they take the wrong type of funding. That's really the goal here, to help everybody out.
Should I give it to them, Ryan? Like, should I tell them about one of the biggest scams out there and just leave it off at that for the next episode?
100%, bro.
School, guys. School, college. College is a scam. It's one of the biggest scams out there. So there's people that go to school for years, doctors, lawyers, just to make $150,000. Me and Michael over here are about to collect a $600,000 commission soon, like in the next couple of months. So I don't know any doctors or lawyers that make that much. And I've made someone's salary in like 1 week before. So one of the major hacks, guys, is mentorships. So if you know somebody or you follow somebody on social media that's verified, or the best way to verify is to go speak with their students that are in their mentorship. And if they are who they say that they are, you don't understand. They're giving you a blueprint to be successful or to print money, right? But we will definitely get into the school scam on the next episode, because I think that's very important, because a lot of you guys out there are just wasting your money, and it's sad. But guys, I'd like to thank you for joining our podcast. Ryan, thank you, man. I really appreciate you.
Thank you for having me. I really appreciate it.
Definitely. So guys, stay tuned. The next podcast, we're going to have 4 of us on here, and we're going to triple tag team everybody. We got you guys, okay? Stay tuned, guys. Thank you very much for watching.